Today, Sam Bankman-Fried scrambles to bail out FTX even after stepping down from the company. Grayscale refuses to release proof of reserves thanks to security concerns. And Jason Less of Riot Blockchain explains how the Bitcoin miner is growing even as the cryptocurrency's value plummets. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies in the red to start the week. By noon Eastern, Bitcoin hovered near its weekly low, trading just above $16,000. Ether, meanwhile, slid to $1,100, and Solana fell to a little less than $12. Okay, let's talk about the top stories. First up, Sam Bankman-Fried is hustling to bail out FTX despite being booted from the company. In an interview with CNBC, Bankman-Fried said he deeply wished he'd been more careful and that FTX should, quote, be trying to get as much value to users as possible. Now, experts say the likelihood of SBF reaching a deal to bail out FTX is very low, but he claims there are billions of dollars of potential funding opportunities out there. He also says that billions in customer assets are held in other jurisdictions that were, quote, segregated balances. At the same time, though, SBF declined to give more details about the company's downfall or how much he knew about FTX's liabilities. Next, the collapse of FTX has led some crypto companies to release reports on their finances, but not Grayscale. The asset manager behind the world's largest Bitcoin fund said it won't be sharing its proof of reserves with customers. In a statement, Grayscale said, quote, due to security concerns, we do not make such on-chain wallet information and confirmation data publicly available through a cryptographic proof of reserve or other advanced cryptographic accounting procedure. The company also said the news would be a disappointment to some, but contended that panic sparked by others is not a good enough reason to circumvent complex security arrangements that have protected customers for years. Last, Crypto World's Mackenzie Sigalo stopped by the Texas Blockchain Summit and got the chance to speak with Senator Ted Cruz about how Congress could respond to FTX's bankruptcy. He warned against over-regulation in response to the exchange's implosion.
What happened with FTX, on the face of it, it appears to be serious fraudulent conduct. And there's going to be investigations, there's going to be countless lawsuits, and if there was criminal conduct, anyone who committed criminal offenses can and should be prosecuted. I think it's a mistake, though, to take the conduct of individuals engaged in fraud and use that as an excuse to over-regulate an industry that is generating enormous benefits for Texas, for the country. And I'll tell you, I have real concern when it comes to Congress. I serve in the United States Senate, a body where I'm not sure we have 5 senators that could tell you what the hell a Bitcoin is. And so for Congress to suddenly come in and Bigfoot it and try to put rules in place when they don't understand the industry, I think is very, very dangerous. I think the right way for Congress to proceed is to spend time to listen to experts, to study it. Of course, there needs to be reasonable regulations protecting investors, but over-regulating could have the effect of doing massive damage, and I hope the misconduct of one company and one set of actors doesn't do damage to the entire industry.
All right, we are sticking with the Texas Blockchain Summit for our main story. Mackenzie Sigalos also spoke with Jason Less, the CEO of Riot Blockchain, about how the company is growing even as other Bitcoin miners warn of potential bankruptcy. Les also explains how the collapse of FTX brings the whole industry down, including miners. Take a listen.
It's a tough time to be in the Bitcoin mining business right now. There are some players who say that they are looking at bankruptcy. Core Scientific is among them. You guys are doing the exact opposite. You're building out infrastructure. What are you doing differently?
You know, I think it plays into the experience our team has on this space. We've been through multiple market cycles, so we live with that level of, I would just call it paranoia, that market can shift at any time. Bitcoin has this incredible way of going up faster and quicker than you expect, and also going down quicker and harder than you expect as well. So we always think about, financing our business and keeping a balance sheet in preparation for those type of moments. And now that we're here, we're very fortunate because we can continue executing on our current growth plans, and we're able to initiate new ones. And that's really key in our history. Riot has made great strides by expanding during bear markets because that's when the best opportunities are there. That's when the equipment is the cheapest. So we're very fortunate and happy to be in this position where we can hunker down, continue mining Bitcoin, and continue scaling our business.
I mean, it seems like a lot of the players who are folding just had a lot of leverage and they can't make those payments. Is that the fundamental issue, or?
I mean, that's a lot of it. I would say it's both a lot of players being over leveraged, and this whole miner financing exploded in a big way over the past couple of years, aligned with this bull market. And I think what we're seeing in the broader industry is that didn't work out for anyone. It's not working out for the lenders. It's not working out for the borrowers. That's okay. I mean, we're new and we're learning and evolving as an industry, and I'm sure that structure will evolve over time and it be figured out. So I think every variable that could work against some miners worked against them. The over leveraged position, the price of Bitcoin going down, the Bitcoin mining difficulty going up, and another curveball in 2022 was power, the cost of power going up. And if you didn't have a structured fixed power agreement or a strategy to mitigate that cost, that was just another gut punch in there into your economics. So that's another area where Riot positioned itself very well and have been able to report a very competitive cost of power.
The biggest story in crypto of the last few weeks has been the implosion of FTX. A lot of investor confidence has been eroded by some of the revelations about how that cryptocurrency exchange operated. Mm-hmm. This is separate to Bitcoin mining, but has there been a contagion effect to this end of the spectrum?
I think it certainly has. I mean, like you said, no real direct impact on Bitcoin mining, at least from Riot's perspective. Most miners like Riot, we're not trading on FTX, directly involved in that. But what we've seen is a rippling effect through the whole industry. And certain financing partners out there have been damaged by these events, and their operations have been impacted. So while we are not impacted by that directly, like you touched on, indirectly, this brings the whole industry down. This brings a lot of challenges. This makes it more difficult to finance our businesses. Institutions that we wanted to bring in this space are now going to be more skeptical as a result. And regulators have a new set of eyes on it. So that puts a lot on us as industry operators to get out there as educators and get out there as proponents of our business and use this as an opportunity to explain Bitcoin is not crypto. Bitcoin mining is not FTX. These are separate things. What we saw there is a problem that Bitcoin is trying to fix.
Mm-hmm. And so are you talking to regulators, and are you talking to politicians to enlighten them as to the nuances and the differences in the space?
We take every opportunity we can to do that. We recognize, as one of the leaders in Bitcoin mining, we can't just sit back and hope someone else is going to do that for us. Okay, there are many great groups out there doing advocacy, and we work with them, like the Texas Blockchain Council here, has done an enormous job interfacing with regulators and politicians in the space, and that's resulted in us having some really meaningful support. Mm-hmm. Governor Abbott, I think, is an incredible ally that Bitcoin and Bitcoin mining has in Texas, and that's because he's a smart guy. He listened to the story. He understood what's going on. And we just have to get out there and continue to have these meetings and continue to tell these stories and act as stewards of this industry to advance it for all of us.
Now, you are still expanding and you are weathering the storm, but your stock price isn't doing so well. How worried are you about that?
I think what we've seen over the history of publicly traded Bitcoin mining stocks is they have a beta even beyond Bitcoin itself. Bitcoin mining stocks seem to trade as a leveraged bet on Bitcoin, and this year the Bitcoin mining stocks are trading relatively in line with Bitcoin. Many of them performing worse than Bitcoin. The corollary there is in 2021, a lot of Bitcoin mining stocks were outperforming Bitcoin, and I think that's the nature of what Bitcoin mining is, a leveraged bet on Bitcoin. If you're producing Bitcoin lower than the market price of that coin, then you have a leveraged opportunity to accumulate Bitcoin. So to get back to your question though, am I worried? I think this just goes back to the experience that we have. I recognize the opportunity we have in the infancy of this industry, and we are working to build investor confidence over time, and that doesn't come overnight, but it comes with consistently executing, making objectives and goals, meeting those objectives and goals, and demonstrating a track record of success.
Are you looking to either acquire one of these companies that might fold or buy their assets at a discount?
So from Riot's position, we have a huge pipeline of infrastructure to build right now. Our Rockdale facility is, as far as we're aware, the largest Bitcoin mining facility in the world, about 700 megawatts of Bitcoin mining capacity, and we've initiated a new site now that's 1 gigawatt in total capacity. So we have a huge pipeline, just leveraging our current operational capabilities, our current development capabilities, and economies of scale. So we're not as in need of infrastructure and capacity. That being said, hey, there are opportunities out there. You know, there are a lot of distressed assets, and there aren't a ton of buyers of them. And we are mindful that these eventually the financial math will be too hard to ignore. So we have a team dedicated to that, and we keep an eye on all these opportunities.
Last question for you. What should miners be focusing on going into the halvening, and is that when you're expecting prices to come back up?
Historically, halvings have resulted in bull markets in 6, 12, 18 months after. So that's a pattern that it's hard to ignore. History doesn't dictate the future, though. You can also argue that those were in different macroeconomic environments, zero interest rate environments that maybe amplified those impacts more than they would naturally occur. So I think the way miners can prepare is just be ultra paranoid about your cost. That's from a power perspective. If you have debt, that's try to get out of that from the debt financing perspective, and then also the efficiency of your machines. Your power cost and the efficiency of your machines are going to drive that break-even cost of Bitcoin. So now's the time. Just anticipate the worst and prepare for that, and then appreciate the upside when it gets there.
What is your break-even point at your facility?
For Q3, so we just released our Q3 results, and all factors considered into our power strategy and cost of revenues, our cost per Bitcoin was approximately $8,300.
That's great.
Yeah, and that's a testament. I really will attribute that to the power strategy and the grid balancing efforts that Riot participates in. We own large blocks of power, and we are able to sell that power back to the grid and stabilize that grid when demand is high. So that's market forces dictating the allocation of supply, not a master regulator, grid coordinator. And it's a very efficient system. And by us taking that financial risk, we both stabilize the grid and support our communities and get the financial benefit from doing that. It's a unique property that Bitcoin mining has.
Okay, that's all for Crypto World today, but we are back again tomorrow, and we will see you then.